An example of a measure that I will put in place as Prime Minister is 100% tariffs on Teslas. I think that should get some attention in the White House.
The biggest player in the electric car market is under attack. Tesla, a company that has dominated Canada for years, is facing a problem that even Elon Musk himself can't solve. Huge duties imposed by Canada on American electric cars could dramatically change the entire market. Prices for Tesla are soaring, dealers are in a panic, and competitors are already preparing to occupy the vacated niche. It's not just about sales, it's about the future of the entire industry.
I think Americans are very concerned right now about these tariffs that are about to go into place and could impact their bottom line and their cost of goods. Let me ask you, as you just mentioned Elon Musk, I think everybody in this country is learning a lot about his influence, which is...
Imagine you're a Canadian buyer who's been dreaming of a Model 3 for a long time. You've been saving your money, counting on government incentives, but suddenly prices skyrocket, and now your choice is to either overpay thousands of dollars or look for an alternative. And there are thousands of people like that. Tesla, used to leading the way, finds itself in a position where its cars may be too expensive for the mass market for the first time. But the problem goes much deeper than just raising the price of cars. The tariffs affect not just the final cost of the cars, but the entire supply chain. Canadian factories that supply Tesla parts are also under attack. Any part that crosses the border is now subject to additional fees, which increases the cost of production. That means potential delays, supply disruptions, and even layoffs.
Unwieldy and over the top, just to say a few words. You mentioned 100% tariffs on Teslas to hit Elon Musk. He owns a number of other companies. Obviously, there's Starlink. Would you ever consider canceling Canada's contracts with Starlink, for example?
Absolutely, and Canadian premiers have already said that they would do that. I think you made a really important point a minute ago, Jen, which is...
Competitor companies already see this as an opportunity. Ford, General Motors, and Rivian can all offer their electric cars without such duties. If Tesla is forced to raise prices, other manufacturers operating in Canada remain in the same price segment. For many buyers, this will be the deciding factor, and for the first time in a long time, Tesla may lose ground. But what will happen next? Elon Musk is not the kind of person who will simply accept defeat. Is it possible that Tesla will change its strategy? Could the company move production to Canada to avoid these duties? Or will Musk do something more drastic using political leverage, social media, and pressure on the government? One thing is clear, this situation is far from ordinary. This is not just a localized economic problem, but an event that could set off a chain reaction for the entire electric car market. How will this conflict develop? How will it end? And what other surprises may await Tesla ahead? We analyze the situation in detail, analyze the facts, and predict the consequences. Do not switch. The most interesting things are ahead.
On the tariffs, is there any room left for Canada and Mexico to make a deal before midnight? And should we expect those Chinese tariffs, the extra 10%, to take effect?
No room
tomorrow?
left for Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow.
Canada is dealing a surprise blow to Tesla, and the blow could be one of the most painful for the company in a decade. The sudden imposition of high import duties on US electric cars doesn't just make Tesla products less affordable for Canadians, it jeopardizes the company's very strategy in this market. The reason? Political differences between the two countries that have escalated into a full-blown trade war. The story began when the US imposed new tariffs on Canadian aluminum and steel, saying it was necessary to protect American industry. The decision sparked a storm of outrage in Canada, where many companies had partnered with US manufacturers for decades. But most importantly, it also affected the auto industry, which is closely tied between the two countries. In response, the Canadian government decided to retaliate by imposing stiff duties on imports of American cars, including the entire Tesla lineup.
And Jen, I think Americans, I don't think you think about Canada all that much, but I think when you do think about Canada, you might think, oh, they're smaller than us. Is this really something I should be worried about?
This came as a real shock to Tesla. The company was counting on steady growth in Canada, where demand for electric cars has only increased in recent years. Canadian cities were investing heavily in charging stations. The government was offering generous subsidies for electric car buyers, and Tesla was literally swimming in this ideal market. But now the situation has changed dramatically. Imagine you're a potential customer in Canada planning to buy a Model 3. Just yesterday, the price was around 55,000 Canadian dollars, with all rebates and subsidies included. But now, because of the new duties, the cost has jumped by 15 to 20%, and the same Model 3 costs 65,000. For many buyers, this becomes a point of no return. The hardest hit will be the middle class, those who considered buying a Tesla as an investment in the future and a way to reduce fuel costs. Now buyers are faced with a difficult choice, either to overpay huge sums for an American electric car or to pay attention to competitors. And that's where the most unpleasant part for Tesla begins.
Well, the stock market is worried. Shares have gone down, and this has been a terrible year for US stocks already because of these tariff threats. And the reality is, you guys need us. We are your largest market by far.
Competitor companies, such as Ford and General Motors, have already felt the moment. They are actively working on their own electric car models, but unlike Tesla, they have factories in Canada. This means that their products are not subject to duties and therefore remain much cheaper. GM officials have already said they are considering increasing electric car production in Ontario to capitalize on the momentum. Rivian, another up-and-coming player in the electric vehicle world, has also launched an aggressive push in Canada, offering buyers favorable terms. But the problem isn't just competition. Tesla also faces serious logistical challenges. Most of the components for the cars are manufactured in the US, then cross the border into Canada, where they are assembled, and then shipped back to the US for final tweaks. The introduction of duties makes this process unprofitable, because now each such shipment is accompanied by additional costs. As a result, the company is forced to look for workarounds, either to accelerate the search for local suppliers or to raise prices. Elon Musk is known for his ability to find non-standard solutions, but this time the situation is really complicated. According to rumors, possible strategies are already being discussed within the company, from partial localization of production in Canada to aggressive lobbying to try to influence the Canadian government and get conditions relaxed. However, such a process could take months or even years, and the market is not waiting. There is another important factor that could make Tesla's situation worse. Some experts claim that the Canadian government is considering increasing subsidies for locally produced electric cars. If this happens, Tesla will find itself in an even more disadvantageous position. Imagine the situation. Canadians will be able to get a significant discount when buying a Ford GM electric car, but Tesla will cost tens of thousands of dollars more. That would be a real hit to sales.
The US sells more to Canada than to China, Japan, the UK, and France combined. So we do have leverage. And as Prime Minister, I will use it. And not because I want to. I mean, the irony about this, the stupidity about this is right now we have a balanced and mutually beneficial relationship. There is a win-win here. There is an exit ramp. But Americans need to know that if you hit Canada, we will hit back, and we will be sure that our retaliation hurts.
But the biggest risk for Tesla is reputation. The company has spent years building an image as an innovator and market leader, offering technologically advanced cars at competitive prices. However, if the duty situation persists, Tesla risks becoming an elite brand available only to a narrow range of buyers. This could lead to a mass exodus of customers who simply aren't willing to pay that kind of money. Some Canadian dealers have already started to panic. They are not sure if they will be able to sell cars at the new prices and fear that demand will plummet. One dealer in Toronto told Report anonymously that the company has already suspended orders for some models, waiting for developments. This is a worrying sign that indicates that the market may indeed be slowing down. So what is the way out of this situation? For now, Tesla is at an impasse. The only option is to either wait for a political settlement or try to circumvent the new duties by drastically changing logistics. However, both options take time, and every week of procrastination means millions of dollars lost. All of this shows just how much politics can affect business. Tesla seemed to be moving forward steadily, expanding its presence, making plans for further growth, but one government decision turns the company's entire strategy upside down. Will this be the end of Tesla in Canada? Not likely. The company has the resources and ability to adapt to the new environment. But how painful this adaptation will be is a question that worries not only Elon Musk, but also millions of his customers, investors, and employees. The new tariffs on American electric cars don't just hit Tesla. They force the company to reconsider its entire supply, logistics, and even pricing strategy. Whereas Tesla could once afford to build a business model based on scale of production and a relatively stable trade relationship between the US and Canada, that arrangement is now cracking at the seams. Every step in the delivery of cars, every border crossed, now means additional costs that will inevitably lead to higher prices. But most dangerous of all is the uncertainty in which the company finds itself. Tesla is used to aggressive expansion. It opened new markets, built supercharging stations, introduced service centers, and expanded its dealer network based on the logic of steady growth. In Canada, things were going that way. But now, with the introduction of duties, the company faces a new reality. Every border crossing now adds unforeseen costs. Let's say parts for the Model Y are made in the US, but some of the components come from Canadian factories. Whereas transportation between countries used to be seamless, tariffs now make that supply chain much more expensive. This means not only higher production costs, but also potential delays in production. And any delays in the automotive industry mean lost money and a damaged reputation. The situation is exacerbated by the fact that Tesla has always built its business model on high margins. The company couldn't afford to cut prices as aggressively as traditional automakers because its core profits are built on technology and ecosystem. Every change in cost structure can have a major impact on financial performance. In an environment where tariffs can increase the cost of each car by 10 to 15%, Tesla faces a difficult choice: either pass those costs on to customers, risking losing customers, or try to cut costs by changing logistics and manufacturing processes. The option of finding alternative suppliers within Canada looks logical, but in reality it's not so simple. The Canadian auto industry does not have the same capacity as the US auto industry. Many key components, including batteries and complex electronic systems, are manufactured exclusively in the US or imported from China. Setting up new supply chains isn't just expensive, it takes time, and time Tesla doesn't have. Against this backdrop, competitors are not missing a chance to seize the moment. Ford has already announced the launch of a new electric car production facility in Canada, allowing them to avoid duties and offer Canadian buyers more favorable terms. General Motors, which was previously losing out to Tesla in the electric car segment, is now getting a great chance to seize the initiative by promoting its Chevrolet Bolt and preparing to launch new models assembled in Canada. Even European companies like Volkswagen and Hyundai are watching the situation closely, considering the possibility of increasing electric car shipments to Canada, taking advantage of Tesla's problems. But the main threat to Tesla is not just competitors, but the market itself. Canadians are used to a certain level of pricing and availability of Tesla cars. They expected the company to keep the cost of cars within reasonable limits, especially with government subsidies for electric cars. Now, however, with price increases due to tariffs, many buyers are reconsidering. Instead of Tesla, they are starting to look toward hybrids or even traditional internal combustion engine cars, which suddenly seem less costly in the long run. Where once buying a Model 3 or Model Y was seen as a wise investment for the future, it's now becoming a luxury. But perhaps the most troubling sign was when Tesla started getting order cancellations. According to some sources, the number of Tesla pre-order returns in Canada has risen by 25% since the tariffs were announced. This is a huge blow to the company, which has always relied on high pre-order rates as one of the main indicators of business stability. Elon Musk, known for his Twitter activity, has already commented on the situation several times, hinting at the possibility of radical solutions, including moving some production. But the question is how quickly Tesla will be able to adapt to the new reality. There's another problem: the Canadian infrastructure itself. Tesla has made huge investments in a network of charging stations, service centers, and dealerships across Canada. If the company starts losing market share, it will call into question the return on that investment. Investments in expanding the network of supercharger stations may not be worthwhile if customers start switching to other brands of electric vehicles that do not support Tesla supercharger. The tariffs could also pose a problem for other players in the US market. For example, Apple and Google, which are developing their autonomous transportation projects, could now also face similar restrictions if Canada decides to extend. the duties to other tech companies. This means that the conflict between the countries could go beyond the auto industry and affect the entire tech sector, which would be a blow to the investment attractiveness of both the US and Canada. Perhaps Tesla could find a compromise solution by making arrangements with the Canadian government. For example, the company could promise to build a plant in Canada in exchange for lower tariffs. But such a project would require huge investments and time, and Tesla is used to acting quickly. The question is whether Musk can afford such a long-term strategy when immediate financial losses are at stake. The geopolitical factor cannot be ruled out either. The US and Canada have always been close economic partners, but the current trade conflict could seriously affect their relationship. If Washington decides to respond to Canada with additional measures, it could lead to an even greater aggravation of the situation. Tesla in this case turns out to be just one of the pawns in a big political game, where decisions are made at the level of governments, and the consequences affect millions of ordinary people. Thus, the introduction of tariffs has already started to change the balance of power in the electric car market. Tesla is facing stiff competition, supply chain issues, and falling demand among Canadian buyers. But the main question remains, how long will this crisis last? And what steps is Elon Musk willing to take to maintain the company's position in Canada? As Tesla struggles to cope with the unexpected financial blow caused by the new Canadian tariffs, its competitors are watching the situation closely, waiting for the moment to strike a blow of their own. Tesla has long remained the dominant player in the electric car segment, but its position is no longer as stable as it once was. In recent years, the market has changed as traditional automakers began to catch up. New players entered the industry, and consumers have become more demanding of electric car prices and features. Now that Tesla is forced to raise prices due to rising import costs, a window of opportunity is opening for competitors that they don't intend to miss. Ford and General Motors have already announced that they will expand electric car production in Canada, allowing them to avoid duties and offer more favorable terms to buyers. GM is actively promoting the new Chevrolet Bolt EV, which is now becoming not just an alternative to Tesla, but a real competitor with a significant price advantage. Rivian, recently considered a promising startup, is rapidly gaining momentum and preparing localized production, which makes its R1T and R1's models extremely attractive for the Canadian market. Volkswagen and Hyundai are also not left out and intend to take advantage of the situation by offering electric cars to buyers without additional price markups. The most alarming thing for Tesla is that the situation with the duties hits not only the financial side of the issue, but also the perception of the brand. For a long time, Tesla has been associated with technological superiority and innovative approach to transportation, but now the company may find itself in the position of a car manufacturer for the elite rather than the masses. The perception of affordability of electric cars has always played an important role in popularizing them, but now Tesla is facing the fact that its cars in Canada may simply become unaffordable for most. Dealers have already begun to report declining interest in Tesla, especially among new buyers. While the Model 3 was previously the obvious choice in its segment, customers are now becoming more price conscious. Many potential buyers who had already placed pre-orders have started canceling them, fearing that the final cost of the car will be too high. Analysts say that if Tesla does not take emergency measures, it could lose up to 30% of its share of the Canadian electric car market over the next 12 months. But even if Tesla manages to partially offset the loss and hold on to the market, the deeper problem lies in the company's strategic development in Canada. Elon Musk has repeatedly stated that Canada is a key destination for Tesla, and the company has invested millions of dollars in infrastructure, service centers, and supercharging stations. However, the new tariffs may force the company to rethink its investment plans. The opening of new service centers may be postponed indefinitely, and plans to increase the network of supercharging stations may be reconsidered. There is a possibility that Tesla may decide to reduce its presence in Canada and focus its efforts on other markets where business conditions are more favorable. Such a move would certainly be a major blow to Canadian customers, but businesses can't afford to operate at a loss. It is quite possible that Tesla will adopt the tactic of temporarily reducing investments in Canada, watching the situation and assessing whether there is a chance of tariffs being eliminated or eased. Tesla's large investors are also watching the situation closely, and the markets have already started to react. The stock has sagged since the announcement of the new duties, as many investors fear that the trade war between the US and Canada could cause deeper damage than expected. The volatility of Tesla stock has already been a cause for concern among large funds, and if the negative trend continues, it could lead to pressure from shareholders demanding concrete solutions to minimize losses. Another important aspect is the potential impact of the tariffs on the company's human resources policy. Tesla has been aggressively growing its service network in Canada, hiring new employees to service the growing number of electric vehicles on the country's roads. However, if sales sharply decline, it will inevitably lead to a review of its staffing strategy. Job cuts could be not just a financial measure, but a serious image blow to the company, especially in an increasingly competitive environment. This situation demonstrates how closely linked politics, economics, and business are. If earlier Tesla could simply develop advanced technologies and offer its customers the best on the market, now the company has to play by new rules, where geopolitical factors turn out to be no less important than innovation. The question is how quickly Tesla will be able to adapt to these changes and what steps Elon Musk will take to preserve the company's position. While Tesla is working out possible ways out of the crisis, the main question remains open. Is the company ready for such large-scale changes? A new stage of trade wars, unexpected decisions of governments, and growing competition create a situation in which the usual business models may not be effective enough. Tesla will either adapt by finding new ways to operate in the Canadian market or face the prospect of losing one of its key overseas sites. Elon Musk is not one to wait patiently for an outside solution. In response to the imposed tariffs, he has already started to act, using his proven methods, pressure through social media, attracting public attention and negotiations with influential people. Tesla is reportedly holding private talks with Canadian government officials in an attempt to get the tariffs relaxed or offer a compromise solution, such as partial localization of production. Musk has also hinted that if the duties remain in place, Tesla may consider shifting some supplies through alternative routes, reducing reliance on traditional import chains. At the same time, Tesla is using the situation to increase pressure on the US authorities. The company openly states that such trade conflicts harm not only it, but also the entire electric car industry, slowing down the pace of their spread. Musk, known for his ability to influence political decisions, may try to get US tariffs on Canadian metal renegotiated to force Canada to lift retaliatory restrictions. But even if Tesla manages to find workarounds, the incident is already a wake-up call. In a world where trade wars can erupt at any moment, businesses must be prepared for the most unexpected challenges.